No smiles at Coca Cola, the soft drink heavyweight feeling the weight of the global economic slowdown and the weather. Profits fell because with less money to spend, people bought less soda. But Coke says things are looking better for the second half of the year. Standard & Poor's Beth Ann Bovino.
Well, I think Coca Cola, like many other companies, are seeing a softness in the U.S., softness and certainly a recession in the eurozone, and softness abroad. I think this is kind of in line with what we are seeing for the U.S. economic outlook. We are seeing, though, that we do expect in the second half of the year, once the headwinds from the United States U.S. government starts to dissipate, probably much later in the year, we could see an improvement in the second half. So we are in line with Coca Cola.
There are a lot of reasons why people drank less of Coke's products around the world. Besides consumers having less disposable money, the weather was really bad. Monsoon season started early in India, Europe had flooding, and in the US it rained a lot. Coke said there was more rain in June than in the past 50 years. According to weather analyst Planalytics, in the US, weather alone was responsible for a 1% drop in soft drink sales. Shares of Coke, a Dow stock, fell on the news, but analysts see sunnier skies ahead. Bill Schmitz at Deutsche Bank has a buy on the company and wrote, "Global market shares have been resilient and relative valuation remains compelling." And Bonnie Herzog at Wells Fargo Securities wrote, "Overall, we believe Coca-Cola's long-term growth story remains intact. We suggest long-term investors build positions on weakness." And Coke says the skies are clearing and the second half could see a rebound. Weather trends are returning to normal, and changes put in place in regions like China, where sales have been flat, are expected to finally start to pay off.